Sir, sir, thank you, sir. Good evening, and you are welcome to Vijayawada once again, sir.
Thank you, sir. Thank you, sir. Thank you, sir.
Hi, Abhishek ji.
Hello, Narendra.
How are you? You were
Very
smiling in SASC.
Happy to intimate that our existing team members, Narendra sir, Nekta Ravikishore sir, and Shrita Shireen madam is re-elected, sir.
Oh, very good. Congratulations.
Actually, I
to all
thought
of you.
of informing sir, but my IPC past statements are informed. Actually,
No, we are updated on Facebook, but when we see face to face, it is always nice to wish again.
And one more thing, Purna, you should intimate Abhishek sir about the award you have won this year.
Yes, of course. It's a wonderful achievement.
I already informed when I spoke to him, sir. The first person to inform is Abhishek sir only early in the morning because night Prashant sir has called me. That time counting was going on at our branch, and after that outside, I mean, well known to our person, a good friend of ours also, and I informed Abhishek sir only first actually. Other regional council members also.
Thank you, sir.
Shall we start the program?
Yeah.
Permission, Abhishek sir. Yeah, Narendra.
For me. Okay, sir. For me.
Respected Chairman of Vijayawada branch of SASC, CA Purna Chandra garu, and Amaravati CS Chairman R Manikaran garu, and our managing committee members. Today's ever smiling speaker from SASC, Abhishek ji, and another speaker is going to be joined, Sangu Ramakrishna garu from Visakhapatnam. And friends, this today's and tomorrow and day after tomorrow we are having the 3 days program, and 3rd and 4th and 5th. And today is the 3 hours program, and day after tomorrow, tomorrow and day after tomorrow 2 hours CP is going to be conducted by our branch. And today is the budget on the budget, indirect taxation and direct taxation, VCM on budget and IT and GST, 3 areas we are going to be touch upon that. And today 2 speakers with us before going to the further program. And now I request all the members join for the motto song, and as a mark of respect, not required to stand, as a mark of respect, put your right arm at your heart.
येष सुप्तेषु जाग्रति, येष सुप्तेषु जाग्रति, कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः, तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा, तदेवामृतमुच्यते, तस्मिन् लोकः शितः, सर्वे तदूनात्यपि कश्चन, एतद्द्वैता 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 एतद्द्वैता.
Friends, actually this program is associated jointly with ICSA chapter Amaravati also, and now as a mark of respect, now I request ICSA motto song is also present.
Mani sir, voice is not coming.
Yeah. You need to share your audio also, sir.
Yes, sir. But sir, audio రాలేదు. Please. చాలా స్లోగా వచ్చింది సార్. వస్తుంది రావట్లేదండి. సార్ ఇట్స్ టెక్నికల్ ఎర్రర్ అనుకుంటా సార్.
ఓకే,
సారీ సార్. సార్ అసలు రావట్లేదు సార్.
Yeah, friends, it is a technical problem. Yes, we'll consider, sir. And now I request branch chairman CAK Porchandra garu give his welcome address.
Thank you, Narendra. Member from SRC, past secretary of SRC, Dr. C.A. Abhishek Murli garu, today's resource person. Chapter, ICC chapter chairman Manikiran garu, my immediate past chairman Gstr garu, secretary Narendra, treasurer of Vijayawada branch Ravi Kishore garu, and my other colleagues at MC, past chairman of Vijayawada branch, and all the members of both the chapters, that is ICA Vijayawada branch and ICSI Amravati chapter members who are logged in for today's virtual CV seminar. Good evening to one and all. At the outset, I welcome you all for today's seminar on the topic entitled Analysis of Union Budget 2022-23. So immediately, and I should also recognize the presence of my good friend C.S. Satish, actually, who initiated upon thought and who have joined both the chapters, and also gave me, of course, our, before that, I should also inform you that, in fact, already my immediate past chairman GSR sir already shared the good news that all my sitting colleagues with whom we have traveled for the past 3 years, they have been re-elected. Shrita Shirin madam in absentia, Ravi Kishore garu and Narendra Babu garu. They'll be taking the baton over from our three of us who are exiting, myself, GSR and other committee members. So in their absence here, we were discussing to whom to rope in. To speak up on the union budget. Then, in fact, Satish and myself have come to rope in. Excellent person who is ever smiling person. In fact, to put it in my secretary words, Abhishek sir, and I also recognize. I'm not only sir, Divya ma'am also has presented a few seminars in Vijayawada forum. In fact, they're in the family genes right from Murli sir, Murli sir, and it has been being passed on. So we are blessed with excellent persons like Abhishek sir and Divya ma'am. So with these few words, and I also happy to inform you that Vijayawada branch has bagged All India second best branch award in large category. Of course, without the support of resource persons like Abhishek sir, Central Council members, Regional Council members from SIRC, and members who have been ever supporting right from since COVID pandemic, when my past chairman GSR sir has initiated the programs with the help of Ravi Kishore garu, Narendra garu. It has been a continuous saga of vibrating, wonderful sessions being organized, of course, with their help. And I should recognize the, continuous help. Even in my absence also, they were encouraging me to do plan and perform and roped in best of the best persons so that we could give best service to the members, and not only members, students also. And even not only apart from that, we have also conducted few CSR activities. So of course, that is we can see that we have bagged all in a second. So I thank each and everyone for who have contributed to the success of Vijayawada branch and continuing the legacy of Vijayawada branch. So So with these thoughts, I also request all the participants to note down the vital aspects which will be touched upon by Abhishek sir. Sir, on that day we had election going on at our branch, so we couldn't. First time we missed budget live, but I don't know what's till now I couldn't go through also. So I thought when I roped in, so anyway I hear it from Abhishek sir. Today is for us today you are FM sir, finance minister for us because I'm hearing it first time from you. In your words I will be hearing. Okay. With these thoughts, I hand over the proceedings to Narendra Babu to continue the proceedings. Thank you.
Thank you, Chairman sir. Your words and actually all over India we are the large category branches, sir. Out of all over SARC of ICA, we are the second winner. Only 2 winners are there. We are the second person. Actually, previously it is jointly is there. Some of the branches, only 2 branches out of 45 branches. We are the second person. We are happy to share that, sir. Proudly say that we are continuing the legacy. Definitely, Chairman said definitely. Our further team of MC also definitely will fulfill the branch flag head also. And now I request our ICSI chapter chairman CS R Manikiran Garu give his welcome address, sir.
Yeah. Good evening to each one of you present today. And this is Manikiran, and chairman of ICSI Amravati chapter. It's a moment to extreme pleasure to welcome the speakers who are present here to attend this webinar. On behalf of ICSI Amravati chapter, I offer my regards to all the members and students of ICA and ICSI joining with us, and heartfully and personally thank to Sri K. Purnachandra Garu, is the chairman of ICA Amravati chapter, and Sri K. Satish Kumar Garu, and for jointly organize this webinar. And without that, this webinar is not possible at all. And so I'm very thankful to you, sir. And I would like to thank to speakers of Sri Abhishek Murli Garu and CA Sangur Ramakrishna Garu, and for taking this precious time, making this event possible and guiding us throughout. Means time is union budget of 22-23 and its objectives also. And I wish this webinar enlightening us to all and providing us with the approach to deal with this, anything for the problem of tomorrow. Once again, thank you and one all for giving this opportunity, and thank you so much. And hand out to the Narendra Babu.
Yes, thank you, Manikaran ji. And definitely will further also associate to continue this same type of programs in future also, sir. Thank you. And this is the right time to introduce our today's ever smiling speaker from SARC, past secretary of the SARC, and well known to the Vijayawada fraternity, and his family well known to Vijayawada fraternity, Dr. C.A. Abhishek Murali Garu. I feel it's a great privilege to introduce him, but it is tough to me because his profile is having more than 5 pages. All well known. Recently elections also, everyone known is beautiful colors and all the things. Your profile
because
is famous
the budget,
and familiar.
there is something, there is nothing on the budget, na? So we can go on with the profile of the Abhishek sir.
Yes, sir. Yes, sir. I will brief introduction. It is the responsibility of a secretary. And as a brief introduction, some of the new members may join from the ICSI and as well as the CA also. Okay, and CA Dr. Abhishek Murali is a qualified BCom, MCom, FCA, ACMA, CGMA, CIMA from London, CISA from USA, DISA from ICI, ADIT from UK, diploma in literature. He is having various qualifications. I think he is having all over the world, which are the best universities. He is having the qualification certificate. I think it is nothing more than that. He is having a lot of qualifications. In addition to that, also he is chaired various positions in the SARC level and ICA level. In other chapters also, other chambers like commerce and all, like a chairman and vice chairman, all the is a member of regional audit committee, chairman of direct taxes committee SARC, chairman of public relations committee of SARC, like a lot of more than 20 committees he is having that. And he is also books authored various books in the overview of the Companies Act and investor awareness refresher It is published by the Institute of Chartered Accountants of India, and is also his book Taxation of Capital Gains. Under the, it is going to be printed. At to waiting for that capital gains. Actually, is I think he has conducted more than 500 seminars on the capital gains, because he is more expert in the section 54 and 45 to 54, more expert area. I think if I am right, is it right, sir? Yes, sir. And his positions in various corporate chairmen, so co-chairman of the Direct Tax Committee for Hindustan Chamber of Commerce. He is also Dr. Abhishek Murali was an executive committee member of the Hindustan Chamber of Commerce from for the year 2015-16, and nominated technical reviewer for the Shield panel of ICA Awards for excellence in the financial reporting. Is like that more than 25 committees he is having that. Briefly, he is a member of the Madras Club and Madras Cricket Club, Presidency Club. How you are having time, sir? You are joining like this. How you are handling the time? We are unable to digest it also. Please guide us to plan time like this also, in addition to the tax budget. Okay, with the brief introduction. Okay, warm welcome to the Vijayawada branch fraternity, sir. Now yours, sir.
Thank you so much, dearest Narendra. A very, very warm good afternoon to one and all present here, joining for today's excellent session on the union budget, which is very timely organized by the vibrant Vijayawada branch. First of all, congratulations to the chairman and the management committee members for achieving the Best Branch Award. As they rightly said, only 2 branches get the award, and they have got the award. It's a great achievement and shows the efforts and the endeavors by the entire team and under the leadership of the chairman. So many congratulations to all of you and the chairman, sir. So firstly, our chairman of Vijayawada branch, CAK Purna Chandra Rao sir, secretary CA Narendra Babu sir, immediate past chairman GSR sir, my very good friend and also committee member Ravi Kishore sir, the chair of the ICSI had invited me specifically to come and speak. So thank you all for inviting me and having me here. So one humble request before I start with the presentation. I request the management committee members, if there is any disturbance in my voice or if my video gets cut, just please do inform me. I have a backup connection also, which is there in place. Suppose there are any issues that are being faced, I will put my mobile data. Right now it's connected to Wi-Fi. But if something happens, please let me know. I may keep on speaking without the knowledge. So that is why I am requesting you to share the budget.
Yeah, Abhishek ji, little bit of disturbance from your end, sir. I think little bit of internet fluctuations is going on.
Voice disturbance, or there is
yeah, your video is also fluctuating, and screen is good, and your voice and video both are.
Okay, I will change right away.
Yeah, it's better to change now itself, then program will continue smoothly.
Is this better now, Narendra?
Yes, it's better.
It's okay. The screen is also visible?
Screen is also visible, your voice is.
Okay, that's great. Yeah. So, my dear friends, on 1st of February, our Honorable Finance Minister had presented once again the union budget, and a lot of changes have come in direct taxes, even though, as our immediate past chairman sir rightly said, not many changes. It appears the few changes which have been made have pretty significant impact, my dear friends. We had a lot of expectations going into this budget. In fact, we thought, given the rising inflation that is happening, the fact that budget rates have not been changed for more than 7 years, the slab rates have not been changed. We were expecting an increase in the slab rate. We were expecting increase in Chapter 6A deduction. We thought maybe housing loan interest under Section 24, some relief will be given there. But unfortunately, it has to be said that despite all of these circumstances, the government, when you ask them the question, is there any changes in the tax rate? Unfortunately, my dear friends, the answer is no. Whether you're an individual, senior citizen, company, HUF, cooperative society, whatever you are, there is absolutely no benefit being given to you. There is no changes in the tax rate, my dear friends. They are maintaining the exact same rates. But here I have to clarify two things, because I have been speaking on budget almost 1 hour after the budget finished. Multiple programs have been happening. One of the most common questions I get asked is, sir, is there a change in the long-term capital gains tax rate? The Honorable Finance Minister spent about 10 to 15 minutes only on direct taxes. She did not spend more time on that. Majorly macroeconomic focus was there. Direct taxes, maybe 10 to 15 minutes only focus was there. So in this, one of the lines she mentioned was there is going to be a surcharge of 15%. The capital gains will be taxed at a cap of 15%. Immediately, a lot of people have been asking, so is there a change in the tax rate? Has it been increased from 10% to 15%? Please let me clarify, my dear friends. The only changes made, no change in the tax rate, only surcharge has been changed. And what they have said when it comes to capital gains, long-term capital gains on the sale of equity shares, they have said that in these cases alone, the surcharge will be capped at 15%. It will not go beyond 15%. It will be capped at 15%. So if I am someone earning income of more than 5 crores, then my surcharge comes at 12.5%, 15% and all is there. So I don't have to worry about that. It may be even higher. It may be 22.5% surcharge at the highest rate. Effective tax rate in those cases is almost 43%. Even for them, it will be capped only at 15% as far as long-term capital gains is concerned. On all your other income, the surcharge will remain the same. This is mainly to benefit the companies who are suddenly selling their shares to either foreign investors or equity investors, etc., to help them, because they'll have very, very inordinate high capital gains. So because of that, their income will be high. So in order to not affect their surcharge and bring them into the highest slab rate because of these share sale, they have limited it. Other than that, for cooperative societies, they've introduced a new slab structure there. Earlier, if your income was beyond 1 crore, then straight away, everyone had 12% tax. Now they have said that if it is between 1 crore to 10 crore your income, then the tax rate is 7%. If it is more than 10 crores, then it is going to be 12%, my dear friends. Now, they also said MAT has been reduced from 18.5% to 15%. So rather than MAT, I must say AMT, it is called alternate minimum tax. It is exactly similar to MAT, and that rate has been changed for cooperative societies and AOPs to 15%. That is all. It is only a surcharge change. No changes in the tax rates, my dear friends. Please keep it in mind. Don't get confused. Don't think that they have done a favor or a ill favor. Nothing has been done. Tax rate remains unchanged. Then this is the big announcement. In fact, I would say in this budget, the biggest announcement is this one, where a new type of income tax return has been introduced. A new type of income tax return. Then we heard about this. We are very, very happy because in the budget, the Honorable Finance Minister, she said, we are introducing a new return. People who have not filed the return, they want to modify their return, they have made omission in their return. Those persons, we want to give them another opportunity. So up to 2 years from the end of the relevant assessment year, we are giving them an opportunity to file a return after paying a small fee. Very happy we were. Oh, excellent! Wow, what a wonderful, change. Let me read a little bit more detailed about this. You see, under the old law, before this new provision under section 139(8)(a), before this new provision came, the law stated as follows. A revised return. What is your normal due date if you want to file the return of income? Let us take, for example, the running financial year 21-22. For the current financial year, what is the date if you want to file the return of income on time? 31st of July 2022. And a revised return or a belated return can be filed up to 9 months from the end of the financial year. That is 31st December 2022 is the last date. Don't get confused with current year where the date is 31st March. They have extended due to COVID, or rather because of income tax website issues. It is not normally 31st March. It used to be. They have reduced it from 12 months to 9 months. So now The last date for the current financial year to file your revised return belated return is 31st December 2022. If you want to file after that, you cannot file. You cannot file under section 139, my dear friends. It is not allowed. You cannot file after 31st December. Even genuine case. I'll give you an example of an assessee. An assessee now, she expired on around 23rd or 24th of December. Her husband came to file his return of income and he brought his wife's file also. And we said, she also needs to file the return, sir. I said, please give the details, give the bank statement, etc. He said, sir, I don't have anything because I have not yet got access. Now only I have given the death certificate, etc. to the bank. Before the death certificate comes in full, it takes time because it will take minimum 1 week at least before everything is given by the government. So therefore, before 31st December, it is not possible for me to give you the details at all. When has the RC expired? 24th of December. 6 days left, sir, to file the return of income. You forget Christmas holidays, all that, everything we are working also you keep. Still, it is not possible in this assessee's case to file the return of income before 31st of December, which was the due date of filing under 139(1). Luckily for us, this year is COVID year, website issues. So date we had till 31st March. So now he has given us the details. We are able to file the return of income in January. But in normal circumstances, there is no way, even in a genuine assessee's case, to file the return of income, my dear friends. So therefore, when this was announced by the Honorable Finance Minister, we were very happy. What did she say? In assessee now, whether he has filed a return of income or not, even if you have not filed, not only for people who want to revise, it is also for people who have not filed at all, whether he has filed a return of income or not, can file or revise a return up to 2 years from the end of their relevant assessment year on payment of a certain fee, or to quote the Honorable Finance Minister, a small fee. Now, this is why when our chairman sir said, I am like the FM and I have to justify, I hope that doesn't mean I will get the brickbats, because when I read the conditions to this section, that is when the real beating came actually. Because in the course of the budget speech, it looked like, oh, what a wonderful provision, excellent, very, very liberal government has become more excellent like that. But then I went into the conditions. And devil is always in the details, sir. When I went into the conditions, they specified certain conditions. What are these conditions? They said, anybody can file this return under this section, except the following people. Who are these people? Suppose I want to file a return of income. Let us take the example, sir. I happen to have some income on which TDS is deducted. I'm a regular IT company. Not income tax, IT means information technology. I'm working in BPO office or something like that. Some income I have got on which TDS is deducted. I offered the income. I forgot about the TDS at all because 26 years it did not reflect. We all know ITR 1, know everything pre-filled. The government is saying website first page itself there. No, don't go to chartered accountant, don't go to tax practitioner. You file the return yourself like that and all they're putting now on website. So like that only, this person has filed the return of income himself. So what happens? He has left it. Then suddenly, 1 year later, he decides, I want to go to auditor. He goes to the auditor. Auditor is saying, sir, what happened? One TDS is there for you now. You have not claimed in the return of income that you filed last year, sir. Sir, what will happen? You have missed a refund, sir. No, sir, you do it now. Unfortunately, time to file revised return over. Since he has offered the income, my dear friends, please note, he has offered the income. He has just not claimed the TDS. So now I want to file a return to claim the TDS. So 139(8)(a), new return is there, updated return it is called. So updated return, I can file it? No. Don't think government is liberal, sir. They have said very clearly, where a new return reduces the tax payable, increases the refund, or claims additional loss. In all of these cases, you cannot file 139(8)(a). You please forget it. If you want to pay tax, you come. You want to claim refund, please get lost. That is what this provision is saying. So that is what they are making very clear. So any additional refund, excess loss, or you want to reduce the tax payable, don't come to this section, sir. You cannot file it under this. Next person, where a person is subject to search or survey. for that specific assessment year, he cannot file a return under this. Let us take the example. When you get searched, minimum 6 years will get reopened. So 6 plus 1, current year plus 6 previous years will get reopened for assessment. So for 7 years, you cannot file a return under this section. Next case, where a return under this section is already filed. What does this mean? Sir, revised return. How many times can I file a revised return? Unlimited. If I want, I can file twice. I can file 100 times, 200 times, 1000 times. I can do how many ever times legally. They may issue scrutiny notice, all that may come. But as per law, I can file how many ever times I want. But please note, under updated return 139.8A, this new provision, you can file a return only once for each assessment year. So suppose I file a return under this, I'm admitting more income and I'm filing the return of income here. Suddenly I find out, oh, I missed by mistake. I missed one thing. Instead of putting one extra zero, I left it. Or I put an extra zero by mistake. I want to revise it. You cannot revise it, my dear friends. The law does not give any such provision as of now. Maybe later they'll bring, but as it stands, you cannot revise. You can file it only once. Once you have filed it, closed, you cannot file it again. Multiple times, you cannot keep filing a return under this section, my dear friends. So it is a one-time filing for each assessment year. And finally, where any assessment proceedings have been initiated, after that, you cannot file a return under this section. That is logical because it is an afterthought. For example, I am assessee. I have one income. I don't want to disclose it. We will see when income tax send notice. I will see whenever they send like that. I'm saying suddenly I get a notice. Then I'm saying, oh, they found out. Now I'll file the return. I'll file under 139.8A. You cannot do it. Once any assessment proceedings or reassessment proceedings have been initiated, you cannot file a return under 139.8A, my dear friends. So these are the certain exemptions. There are a few more for terms of pricing cases, etc. But the main provisions are these. So in all of these scenarios, you cannot file a return of income under 139.8A. Now the next point, Madam told, no, there is some small fee you have to pay if you want to file it. What is this small fee? Let us see. Now, this small fee is 25% to 50% of the additional income plus interest. 25% to 50% of additional income plus interest. What is 25 to 50? When is 25? When is 50? Now let us see. Let us once again take an example, because only if we take a physical example, you will be able to appreciate this provision. Take the current running financial year 21-22. It ends on 31st of March 2022. What is the relevant assessment year? It is assessment year 22-23. Normal scenario, when is the last date to file a return of income under 139.1? 31st of July 2022. We are all on the same page. What is the last date to file belated return of income? It is 31st of December, 9 months from the end of that financial year. So 31st December 2022, we are all clear. Now, this is the interesting point. 25% penalty comes if I file up to 1 year from the end of the relevant assessment year. What is the assessment year? 22-23. End of the relevant assessment year means 31st of March 2023. So 1 year from the end of the relevant assessment year, that is still 31st March 2024. I have time. Whatever I file under this, I have to pay 25% penalty on the additional income tax plus interest I have to pay. What if it is after 31st March 2024? Then up to 31st March 2025, if I want to file between 1st of April 2024 up to 31st March 2025, then I have to pay a penalty of 50%. I have to pay a penalty of 50% in these scenarios, my dear friends. What if I want to file after 31st of March 2025? You cannot file. No matter what, you cannot file any, unless reassessment notice is sent to you. You cannot file a return in all of these scenarios, my dear friends. So this is the penalty provisions over here. Now, these provisions are actually slightly high because I think most practicing persons here, whether you are a CS or you're a CA or any other tax practitioner who is watching, you will all appreciate till 4 years back, you could file how many ever years returns you want. In fact, I remember when they brought that cutoff after 31st of March, I think it was maybe 2017, if I'm not wrong, or 2018. After 31st of March 2017, you cannot file any of the earlier return. We filed 10 years, 12 years, 15 years and all for many assessees actually. Because it is the duty of the assessee to file the return of income. Department can assess later on if they want. But now I'll explain to you why this provision is come. Because we all can see it is not that beneficial actually, this provision. Now I have to clarify one thing over here, because I saw a question come to me over here. And two people have asked what is the intention, and one very, very practical question. Let us give you an example, sir. I am an assessee. My total income, my gross total income before reductions is 2 lakh rupees 10,000. 2 lakh rupees 10,000. Can I file a return under 139(8)(a)? I have not filed a return before. Next point, maybe I don't have to file the return. That is a different thing, because you will say it is not exceeding 2 lakh 50. Why you have to file a return? But I want to file a return. I am a very honest person like that. I want to file a return. So can I file a return under 139(8)(a)? Yes, you can file a return under 139(8)(a). But your next question is this: sir, what penalty I have to pay? Because there is no tax payable. What penalty amount should I pay? The amount calculation is the same. 25% of the additional tax payable. What is your additional tax payable? It is a big zero. 25% of zero is zero. So don't worry, sir. In those cases, you have time up to 31st March 2025, or 2 years from the end of that relevant assessment year, and you can file with zero income tax, zero penalty also, and you can file a return. This is very useful because in many cases, there may be a need to build up capital for whatever reason. But if you have missed filing, it is another opportunity for you to file a return of income. Now is the big question that I think Mr. Prasad Rao has asked me. What is the intention of this question? Dear friends, all of you are aware, mid-November of income, the website is not working properly, issues are there, I am not able to file the return clearly. When I file the return, acknowledgement is not coming. All kinds of problems are there in the income tax website, my dear friends. You and I both are aware of all this. So generally when people came, unless it was an emergency or urgency to file, we advise them, you please wait till the website becomes more stable. Then we will file the return of income. Then suddenly mid-November, I think around 16th or 17th of November, government introduced something known as TIS and AIS, Tax Information Statement, Annual Information Statement. This is once again the reason why they have brought this return, my dear friends. Today, the income tax has so much information about the assessees. So much information. Gone are the days where they will have to pick high value cases and take it up for scrutiny. Now everything is system driven. Whether you offer the information or not, banks are sharing the information, NSDL is sharing information, sub-registrar is sharing information. Forget assessee, everyone else has given details about assessee. Some assessees who came to my office, I told them, sir, you have got interest. They said, no interest. We have never shown this bank and all. I said, sir, this account you have. Oh, Abhishek, we opened 15 years back, Abhishek. Okay, Abhishek, I don't know how you got that in news. We will share the income now. So all the assessees who had not disclosed this year, even savings bank interest, basic thing, they were all coming into the loop thanks to the AIS and TIS, my dear friends. So think about it. If something as simple as savings bank interest now can be captured, that means even large volume transactions, purchase of mutual funds, sale of shares, sale of mutual funds, all of this information also is slowly being captured in all of the data of the income tax. So now about the assessee, current year and earlier years also, the information is available with the income tax. So the reason why they brought 139(8)(a), it's an opportunity for you to comply. If you don't comply, be ready for notice, be ready for reopening. They may have said up to 3 years we can reopen, but if it is more than 50 lakhs, up to 10 years they can reopen now, my dear friends. So therefore, please be ready. Up to 10 years also, if department want to reopen, they will reopen the returns. So it is an opportunity for assessees to comply, Prasad Rao sir. So my view is this. You are all aware that earlier return filing was mandated on income-based criteria. If your income exceeds the gross total income not chargeable to tax, then you have to file the return of income. But now there are expense-based criteria also. You pay electricity bill of more than 1 lakh. You are doing foreign travel of 2 lakhs or more. There is deposits in your current account of more than 1 crore. In all of these cases, whether you have income zero, whether you have loss, all that they don't care. You have to file the return of income. So please encourage assessees. Many people who don't file the return of income, encourage them to file the return of income. If they have missed for earlier years, take their 26 years, take their AAS, take their DIS, file for the earlier years also, my dear friends. If not, at least it will help them build their capital account. To further clarify, I've got a few questions to me again. Can 139(8)(a) be filed if original return or belated return is not filed? Yes, you can. In the speech, they only said modified, but if you look at the provisions, even if you have not filed the return of income, you can now file a fresh return of income, my dear friends. So yes, in all of these cases, you can very much do it. And AIS and DIS, whether it is available for the earlier years, currently it may not be available, but you wait 2-3 months, everything will auto-populate. Suddenly you will find all the information was available. When 26 years first came, you could only see for the last 2 years. You could not go beyond. Now up to assessment year 9-10, I can see the 26 years, my dear friends. Similar thing is going to happen to AIS and TIS also. You mark my words. So please encourage all your clients to file. For us also good, more files. But for assessing even better. So please do encourage people to file the return of income. The next big thing which has come in this budget is taxation of your virtual digital assets. They are called virtual digital assets, but actually this is all your cryptocurrency, NFT, all your Bitcoin, your Solana, Ethereum, whatever name you want to call these Bitcoins, all of these, they have brought the taxability of it because there is a lot of lack of clarity. We did not know how to tax. Whether other sources it will come, whether capital gains, whether it's business income, what they want to do, whether it is legal at all, we don't know. So how to disclose it? Because when there is no clarity on whether it's a legal currency or legal tender, you don't know what to do. If somebody goes and steals from one person, Manikiran sir is there, his wallet is there outside. Suddenly somebody decides to take the wallet and we get a lot of money. He has to file the return of income. Where will he disclose? I got 10,000 rupees from Manikiran sir's wallet. So how do I disclose it? Will it come other sources? But he's in the business of thievery, no? So he has to show it as PGBP only, no? But whether it is legal at all. So like this, lot of questions came up for cryptocurrency also. The very fact that the government has acknowledged it shows that slowly it is going to become a valid transaction soon. So what have they said? Any transaction that you are transacting in cryptocurrency or virtual digital assets, it will be taxed at a flat rate of 30%. A flat rate of 30%, my dear friends. Not only that, no benefit of expenses. No benefit of expenses. If I'm getting income from other sources, I can claim a deduction under section 57. Whatever expenses incurred wholly and exclusively in connection with earning the income, I can claim it as an expense. If I'm having business income, I can claim the same in my P&L after I show it as income in my credit side of my profit and loss account. Debit side, I can show the expenses associated with that. If it is capital gains, I have expenses in connection with the transfer. I have cost of acquisition, cost of improvement. But here they have said for cryptocurrency, even if I take a loan to buy a Bitcoin, I take a loan, I am buying cryptocurrency. If I did not buy that cryptocurrency, I would have not taken the loan. So any interest I pay naturally directly associated with earning that income. Then also I cannot claim it as an expense. So maximum I can reduce is only my cost of acquisition, my dear friends, not more than that. Maximum is the cost of acquisition. I am not allowed to get more than that. Next thing they have said, profits will be taxed at the rate of 30%, my dear friends. But what if I have a loss? You all know cryptocurrency, you may have been reading, it is very volatile. It will go up 600% in 1 week, next week 900%, it will come down like this, it will keep going like our mountains of Tirupati. It will keep going up and down. So therefore, question is raised. What if I incur a loss? Profit means clear, 30%, no expenses can be done, only cost of acquisition I can net off and I have to pay tax. What if I have a huge loss? Can I set it off against other income? Yes or no, you cannot set it off as other income. Sir, can I set it off against that income itself? That there is no clarity. Let us take an example. I buy Bitcoin. I sell it, I have a big profit. I buy also some other cryptocurrency. Let us assume I buy Ethereum. That I have a huge loss. Can I set off the loss from the profit of that? In my view, it is the same income, but there is no clarity on that. I say, okay, chalega. Next year, I will see. I will set it off if I have profit from Ethereum. So I'll carry it forward. You cannot carry it forward. Very, very draconian law. Actually, this is. Profit means we will tax at 30%. Loss means you forget it, you cannot do anything. So that is what they have said now as it stands. And also they have said TDS on every transaction above is 50,000 if you are a non-tax audit case. And if you are a tax audit case or a company, etc., if it is more than 10,000 itself, 1% TDS. Now, one Bitcoin itself is more than several lakhs now. So easily it will get covered by this TDS provisions. So this is the current position, my dear friends, when it comes to crypto taxation. My view, it is going to modify substantially. It will keep on changing. But the good thing is, at least they have taken cognizance of cryptocurrency, that it is valid. So people who are scared to disclose whether I'll take any action, whether they will take legal issue, whether police will come to my house, we don't know. All of that fears were there. At least now slowly those fears can be removed. So that is the only reason why it is a good thing. Next, of course, is one provision. They said they want to reduce litigation. Of course, you saw Vivad Se Vishwas scheme come. The government has been very keen on reducing the litigation when it comes to any of their income tax proceedings. So they have brought a new provision saying that where for that assessee, this is the important point, where for that specific assessee, if any matter is pending before either the jurisdictional high court or the Supreme Court, then in those cases, department will not appeal. Department will not go to ITAT, department will not go to High Court or Supreme Court in that specific case. You just furnish a letter to the Principal Commissioner of Income Tax and he will set in motion the proceedings so that department don't appeal. For people who don't know, let me clarify. Assessment order is passed, huge addition made against me. I go on appeal to the CIT appeals. I win the case before the CIT appeals. Even faceless, I am very confident I win the case. Now, how does the department appeal? Assessee means we know. We will advise the assessee. Sir, we will go on appeal in this case. We have good chance of winning. Sir, low chance of winning, but worthwhile given the demand amount. Or we will say, don't appeal, sir, waste of time. Like that, we will advise. How does the department do this? They don't have such a provision. For them, they have something known as a monetary limit. If the transactions, the additions involved, given in favor of the assessee, that is, the additions have been quashed beyond that monetary limit, no matter how strong the case is in favor of the assessee. Simple case, vanilla case, assessee will easily win. They do not see. If it is more than 50 lakhs, the quantum of the additions, then compulsorily they have to go on an appeal to the ITAT. They have something called monetary conditions. If it is below that, they will not go. If it is above that, they will go. So this is what is known as monetary conditions. That is why department mandatory, they will go on appeal, no matter merit of the case or not, my dear friends. So for this to reduce the litigation, the government have brought this. Now, the next amendment, and trust me, my friends, this is a very, very strong amendment. Cess and surcharge tax has been brought with a retrospective amendment. Why blood, same blood? I'll explain why. Last year, last budget, don't get confused with this budget. Last budget, they brought one change, my dear friends. What is that change? When it comes to contribution to PF ESI, employer contribution is there, employee contribution is there to PF and ESI. There is a provision where employer's contribution, if I don't pay by the due date of the act, which is normally 15th of the following month, if I don't pay my PF ESI in the next month, the employer's share, as long as I pay it before the due date of filing return of income, I can claim it as an expense and I can enjoy. Suppose I don't pay by the return filing date, then whichever year I pay it, suppose if I pay it after 3 months after return filing date, then that year of payment, I can claim it as an expense. Okay, reasonable. But there is also another section called 43B. In this 43B, it is said for employees' share, the employees' share, that share has to be remitted within the due date. That means before 15th of the following month, I have to remit it. Suppose I miss remitting it, 1 day delay, 16th I am remitting because my father is in the hospital. I have to treat him. I am the person, treasury I am taking care of in that organization. So I am not able to remit the PF within 15th. Next day, 16th, early morning, I come and I remit the PF. Can I claim it as an expense? Employer share, you can claim because it is before due date of filing return of income, no problem. Employee share, it has to be within the due date. If you don't, gone, you can never claim it. This is the provision of the law. Various courts have held in favor of the assessees here. They have said very, very clearly that in all of these cases, practically, you forget income tax, you forget employer-employee, you forget 43B and all. Practically, if you are remitting PF ESI, will you ever see so much is employer share, so much is employee share, employer I will remit today, employee after some time I will remit? Does anybody practically see that, or you will see it as a whole contribution to PF ESI? Because any person knows it is all seen as a chunk. You do not see the distinguishment. That distinguishment is purely for administrative purposes. But for actual payment purposes, my dear friends, you will see it as one payment. So you will do it before that specific due date. Now, what happened last budget? Even though so many courts held, practically it is all one. So as long as employee share also you remit before the due date of filing return, you can claim that as an expense, no problem. This is what the government have held. This is what the high courts have held in various cases. Various n number of cases are there, my dear friends. Now the question came up last year. The government said we are giving a clarification. What is the clarification? They said our clarification is that the intention of the law is clear. You should not allow it. If they don't pay by 15th of the month, employee share, you should not allow it all. So the moment this came, people like me who appear in the appellate authorities a lot, we argued saying it is a prospective amendment. It is not retrospective. It is prospective, which means for the years that have finished, you cannot take this. After the budget date, whatever years are coming, you can say for those years it is applicable. So you disallow for those years. So multiple cases are going on. I think most practicing persons here will know that you will be getting a lot of notices either under 143.1 or 143.3 making additions of this PF ESI matter. I am sure all of you are getting. So in these cases, you will be filing an appeal because you have a good chance of winning it because of the case that it's a prospective ruling. Now coming to this amendment that you see on the screen. What is this amendment? You see, we all are aware when we are calculating the profit from your business, you will disallow the income tax paid. But then the law is silent when it comes to your educational cess and higher educational cess or health cess. Cess and health cess, which is there at the rate of 4%. Earlier, it was higher educational cess at the rate of 3%. There is a CBDT circular which says that in all the cases where there is cess involved, then that is an allowable expenditure. So what a lot of assessees did, income tax they will disallow, but the portion of surcharge and cess, they used to allow it as an expenditure, my dear friends. So the 4%, 2%, 3%, whatever it is, they used to allow it as an expenditure and they used to claim it as allowed. Many courts have held in favor of the assessee, saying yes, CBDT circular is clear, so therefore you should allow. Now what the government have come and said? Government have come and said that, sir, it is called educational cess, it is called health cess, but actually it is in the form of a surcharge. Cess you can allow, surcharge you cannot allow. So it is called cess, it's a surcharge named cess. So therefore you should not allow it, the government have come and said. And not only that, they have come and said it's a retrospective amendment from 2005. What of one flashback is coming? Because my dear friends, what is going to happen? When you see any retrospective amendments, suddenly now, everyone who has claimed this as a deduction, you will all be getting reopening notices. Notices under 148 is going to start coming like chiclet. How you get the notice, you get the advertisements in the newspaper, no, they will put one flap like that. Now your notices are going to come in this case, my dear friends. If the government says they want to reduce litigation, the moment you put retrospective amendment, it shows the otherwise, my dear friends. So you can be prepared for heavy litigation when it comes to this matter now, because so many assessees took the benefit of this provision. Then you want to understand why, because our Prasad sir had asked for one of the earlier things. What is the logic behind it? Now, what is the logic behind this? You saw today, just before the program came, I read this article where the CBDT chief has had an interview where they said, if I change the IT law for this cess matter, I will get a huge revenue boost for the government. Huge revenue boost will come. That is why we have made the change. Very honest person. But when you are a tax practitioner, you are expecting for certainty. You don't want retrospective law changes. Prospective changes, okay. Existing law is there. Based on that law, a person is doing tax planning. Then suddenly, 5 years later, you are coming and saying, no, that was not my intention. This is my intention. So then what will you say? Okay, going forward, at least I will not do it. They say, no, that is applicable for last 10 years. You please pay the tax for last 10 years because we will send reopening notices. This is what exactly is happening, my dear friends. It is highly improper. Whether the law is correct or not is a different matter. If the law is incorrect, you modify it, you tax prospectively. Don't modify the law and then say retrospectively taxable from 2005. Last 16 years, assessees are going to suffer because of this change, my dear friends. Now, the next major change is 14A. Now, 14A, highly confusing section because so many issues, so many cases are there on this matter. What is 14A? 14A means you cannot claim any expenditure on an exempt income. Let me give you an example. Till 2 years back, your dividend was completely tax-free. It was fully exempt. Any dividend earned on where dividend distribution tax is paid is completely exempt from tax, my dear friends. Now, I am a company. I happen to be investing in a lot of other companies. Happening to invest in equity shares of companies which are listed. So therefore, any dividends that I'm earning from that is exempt. Now, persons who are managing these investments, I'll be paying them a salary. I am saying my income is exempt, dividend income is exempt. That means naturally, any expenses I have incurred in connection with that, I should not be allowed to claim. Logically, it is correct. I also agree with the same. No issues over here. Now, next thing, let us take it one step further. Now, government department have said, you see how we calculate that. How do we calculate what is the expense involved? Because we will take a scenario of a normal company. I told you very clearly, they have experts who are managing the investments. But suppose it is a normal company. I have investments in my subsidiaries. I have investments in my parent company, and all of these scenarios. Those companies may issue a dividend. Now, I don't need any experts to invest in that company. I'm doing it because subsidiary. Naturally, I've already done the hard work. I've got the company. I don't pay anybody to manage that investment. They are my subsidiary. That is also any dividend the subsidiary is paying. Then in that case, the dividend I'm earning is exempt. Now government is saying some portion will be there. Some logically, something will be there. No, somebody is taking care. Somebody is handling the salary. Somebody is handling the investment. Somebody is going and taking the check and depositing in the bank account. Somebody is checking whether it is credited. Somebody is deciding where you want to use that funds. So therefore, associated with earning that exempt income, some expenditure is there. So they made a calculation under Rule 8D, how that it should be calculated. They say opening balance minus this one calculation is there. Now this is also okay. It's also a little stretching only, very great difficulty. They are somehow trying to associate the expense, but okay, fine. Logically, I agree. Then what happened is, and this is what the amendment, the department took the stand and we won them in many cases. We went on appeal and we beat them. In fact, Vijayawada itself, some assessees, I handled these cases where government came and said, whether you have exempt income or not, you have to still do the disallowance. Huh? What is this disallowance for? If I have any exempt income, any expenditure in connection with that, I have to disallow. Okay, fine. Now what is department coming and say? Whether you have exempt income or not, you have to disallow under 14A. Sir, the basis of this provision itself, if I have exempt income only, how you are saying if I don't have anything? What they are saying? Department is coming and saying that if you have mother only, we should have a child is what we are saying. Baby cannot be there without mother. Now department and government in this budget, they have come and said, yes, very much baby can be there without mother also it is possible, like that they are saying. Highly incorrect, my dear friends, because you read the wording, because I tried to read the wording. This is an extract. It is not my example. What you are seeing on the screen is the wording from the budget memorandum, which was published by the finance ministry. This is the rationale, because when you read this, tell me if you are very clear or you are confused. To illustrate, if during the previous year an assessee incurs an expense of 1 lakh to earn non-exempt income of 1.5 lakhs, he also incurs an expense of 20,000 to earn exempt income, which may or may not have been accrued, may or may not be received during the year. By holding that provisions for 14A does not apply in this year as exempt income, was not accrued or received during the year, it amounts to holding 20,000 would be allowed as a deduction against non-exempt income of 1.5 lakhs, even though this expense was not incurred wholly and exclusively for the purposes of earning non-exempt income. I did not understand at all. I don't know whether you have understood, but I have read this provision multiple times ever since the budget came out. Nothing I have understood. This is exactly the problem with this provision. What the department are trying to say, whether you're earning exempt income or not, maybe next year you will earn it. Next year you will learn, but this year you are claiming the expense, so we will disallow. But sir, we are all accountants. We have all studied accounting. We all know timing difference. We all know matching of expenses and income. Revenue and expenditure has to be matched. So any expenses I am incurring, I will have to match it with my income. Suppose even in a worst case scenario, let us assume the exempt income is coming next year. Then next year I will put 14A and I will disallow it. Simple as that. I don't know why they are complicating so much, because what is going to happen in this is genuine cases also assessees department. We all know how our friends at income tax department are. Moment they get an opportunity, provisions like this, there will be exploitation of the provision where genuine assessees who have not earned any exempt income suddenly will be asked to disallow on a notional income which they will never get also. So I think it's a highly, risky provision to, ratify in the budget. But that's what the government have done here. The next change is regarding faceless assessment. Very few changes. They have some very large reaching impact. You see, now they have said that regional faceless assessment units, or REACs or RFACs as what they are called, is no longer going to exist. And now they have said that a draft assessment order will not be served. I have done multiple sessions on the faceless assessment procedures. I think I did it in Vijayawada also. And what they said now, they said earlier, after the entire proceedings, before the final order is passed, a show cause notice along with the draft assessment order will be issued to the assessee. Now, many people used to ask me, is it simply just for record they are sending, or is it a real opportunity, sir? Let me make it very clear. It is very real. In my own one of my own clients' case, this client came to me in the last minute. He has told his auditor to handle the case. I think the auditor had some difficulty and they sent him the draft assessment order. The auditor then asked him to come and meet me. So I met the client. I asked the client what happened. He said, this is what we have given. I said, we'll do one thing. Assessment order is ready. They will pass it within 3 days. So what I will do is I'll take all the information from you. I'll format a very detailed reply. It was a genuine case. In this assessee's case, it was a genuine case. So I formatted everything, drafted a very good reply with a lot of case laws, everything done. I submitted it. I told the assessee, see, they have kept everything ready. Whether they will accept these now, I don't know, because they have given you 5 opportunities. 5 opportunities before. 5 times you have not furnished this. I don't know why. But we are giving it now. Let us wait and watch. My dear friends, despite it coming at the last stage, after 5 opportunities, I am submitting the information today. The faceless unit accepted my submissions and they made no additions. We got a clean order. No additions were made, my dear friends. So therefore, this draft assessment order was a real and genuine opportunity for the assessee to know what order they are going to pass the show cause notice. Now what they have said, we are going to remove the draft assessment order. Only whatever we are serving before will be this last notice we are sending you. We will not send you a draft assessment order. If you don't respond to our notices, then straight away we will go to the assessment order, which is highly unfair under a faceless regime. Physical regime, okay, there is a discussion. I understand the thought process of the officer. Under faceless regime, I don't know who he is. There's no communication. He sends a notice, I upload. Then he sends another notice, again I upload. There is no discussion. There is no exchange of information, exchange of ideas or thought process. I don't know what he's thinking. When I get the draft assessment order only, I know what he's thinking. So at least I can address whatever issues that he's thinking of. But now they want to remove the draft assessment order, my friends. Why they are doing this, I don't know. Maybe they feel it is cumbersome or whatever, but I think it's highly unfair. Of course, now they have said additionally, if a personal hearing is requested, then a virtual hearing at least must be provided to all assessees. So please, my dear friends, I am repeatedly saying this in all my appeal sessions, all my income tax assessment sessions. If you have any case, please just put one request saying, I want a personal hearing. At least you will have it on record and you will get the opportunity to be heard. Next change is 285B. There was a provision for people who are making movies, or rather cinematograph films is what they call it. For these people, there is a provision saying, if you are making a movie, then any expenses that you are incurring over rupees 50,000, you have to produce a statement. You have to produce a statement to the income tax in the form 52 like that. Highly cumbersome. I don't know why when today you have so many tedious provisions, 194C, 194J. Now there's a new provision which I'll be touching upon. So many provisions are there. This loses its significance. I don't know why they are focusing on movie makers. Now I thought when I started reading this, I thought they are removing it. But instead what they have done, they have expanded the scope. They have said not only people who are making cinematograph films, event management persons, documentary productions, programs for telecasting on any TV or programs or even Netflix, Amazon Prime, all these people, they have to also submit all of this. So all the expenses payments made over rupees 50,000 in aggregate to any person has to be submitted, my dear friends. If you don't submit, penalty under 272A, 100 rupees per day. 100 rupees per day of default will be there. So now, instead of removing this provision, they have expanded the scope. Now, once again, very, very important provision. Very silently, this provision has been brought in. Nobody discussed it. And only when you go through the details, you will see this provision. All of us are familiar with the demonetization cases. And we are all familiar with the way the assessment proceedings have been going on for all of these cases. And ever since then, the new provisions of section 68, 69, etc. for undisclosed incomes. Now what they have said. Earlier, there was a provision where if you are getting share capital, share premium, etc., then you have to establish the source on the source. Whoever has subscribed to your company's share capital, you have to prove that that person had income and you have to justify that that is how they invested in the share capital. That is how you got the source under unexplained cash credit. Now they have added to this where loans and borrowings have also come. That is unexplained. You see, my dear friends, earlier, if I take a loan or borrowing, all I have to do is to give the details of the person who I borrowed the loan from and establish the creditworthiness of that person. I don't have to go and explain the source on his source. I have got the money. I can explain my source. I took a loan from Narendra, secretary. He's a very famous person. He only has given me the loan. So I've taken the loan from him. This is his PAN number. This is his address. You send a verification. You want to send a confirmation letter, you please send a confirmation of balance letter. That is also okay. Once that is all satisfied, he had to allow it. Now what they are saying, I have to go to Narendra, I have to take his income tax returns, I have to take his bank statements, I have to explain where his source is. If they send a letter to Narendra, he has to reply and he has to explain. So now, where any loans and borrowings are there, the source on the source should be explained. Sir, if it is Narendra, okay. He's your friend, he's my friend, he's a very famous personality. What if they want me to explain the loan I have taken from a NBFC? Who is going to come and represent that NBFC, sir? Today, if I call saying credit card issue is there, they will say you speak to that department, you speak to this department, you call that person. That is what is happening for my own credit card. Now I have to explain to income tax department how these people, NBFC, got that money. What is the source of that NBFC? What is the source of cooperative society? What is the source of HDFC Bank? Because they have not signified saying that if you are a famous financial institution, we will let you go. There is absolutely no clarification on those points. So therefore, whoever it is, whatever the nature of it is, whoever the person is, I have to justify their source. How they are getting the income, I have to justify, my dear friends. How we are going to do this? Department can introduce provisions, government can introduce. Practically tell me, if your assessee has to justify by proving the source of the person he has taken the borrowing from, will that person cooperate? Is it even possible for you to do this? Because the onus is now on the assessee, not on the department. Earlier, department has to justify. They have to explain. They will make a reference to that assessing officer. That assessing officer will then explain. Now they are saying that assessee who has taken the loan has to explain. I feel once again, very, very stringent provision unnecessarily brought for the assessee, putting a lot of pressure on him. I'm skipping this just to briefly touch upon it. There's inadmissible expenses. Any expense that is inadmissible under any other law, that should no longer be claimed. For example, one business assessee who was in manufacturing, and you can answer me this question actually, because the interesting interactive point. One assessee is a manufacturing company. What happens to that director? His wife is a government employee. Let us assume she is working in a public sector unit. Now that assessee is in the pharma industry. Pharma industry have a meeting somewhere in Switzerland. So he goes to that Switzerland meeting along with his government employee wife, and he claims the expenses, travel expenses, stay expenses of his wife in the books of accounts. Is it an allowable expenditure, whatever is incurring? Yes or no? Can I claim the expenditure in this assessee's case of his wife traveling abroad, flight travel, hotel stay, restaurant food travel, all of these expenses? Can I claim it as an allowable expense in my books of accounts? So I can see many people are typing, no, you cannot claim, it is not possible. Not even a single person so far has replied to me saying, yes, you can claim. But luckily for this assessee, the tribunals and the high courts have held in his favor. And they said, yes, you can very much claim. It is an allowable expense. But please wait, there is a logic involved. You cannot simply do that. Immediately you will start planning for your client, saying, all of you go with your wife wherever you are going. No, sir, that is not allowed. In this assessee's case, they checked whether the invitation is only for the assessee or they have invited the spouses also. So they have invited the spouses also. Similarly, they checked whether the persons who came for that meeting also came with their spouses. Everyone came with their spouses. So therefore, they said it is an allowable business expenses. Now, can a CA firm, in the exact circumstance, you are a partner in a CA firm and your wife happens to be a government employee or your husband happens to be a government employee, and you are going for a regional conference of SIRC regional conference. You are all coming from Vijayawada to Chennai for the SIRC regional conference, or you're going for the international conference of our ICA. You're taking your wife also with you. You're going by flight. You're staying in a 5-star hotel. Can you claim the expenses for your wife here, my dear friends? So this is what happened in a doctor's case, because even doctors, they have a lot of foreign conferences. One doctor took his wife, who happens to be a government employee. He claimed the expense in his books of accounts. So here they are said, if it is not permissible as per the code of ethics, she is not my partner, she is not my employee, and only partners can go and appear for the CPE programs. I cannot take my wife, she is not entitled for CPE. So therefore, there is no invitation for her. So how can I claim it? My institute itself is not allowing. How can income tax allow? So they have said in cases where it is not permissible as per any law or even code of ethics, the same cannot be claimed in the books of accounts. They brought some minor changes to COVID relief. This was already clarified in a press release, but to further explain, they just brought it in a law saying any expenses incurred for treatment of COVID expenses of either the employee or the employee's relative, then the relative definition as per LTA relative definition. In those cases, the government, the company can claim it as an expense, and it will not be a taxable perquisite. It will not be a taxable gift in the hands of that employee or the relative. But please note, it is only for COVID-19. It has to be directly related to COVID-19. If somebody has a heart attack after testing COVID positive 6 months later, then it will not be allowed. If somebody is giving contribution for cancer treatment, etc., in those cases also not allowed. Only for COVID this is allowed, my dear friends. So it is a relief, not a major relief, but at least some relief. So we have to be happy. Few more changes. Startup exemption date has been extended by 1 year under ATIAC. New manufacturing companies 115 BAB, that also has been extended by 1 year. Next, a new provision under 194 IA. It's an existing provision with a new change. 194 IA deals with TDS on immovable properties. If I'm selling any immovable property other than agricultural land for 50 lakhs or more, then I have to deduct TDS at the rate of 1% on this transaction, on the sale value, on the sale consideration. But what they have said now, in this current budget, you have to deduct on sale consideration or stamp duty value, whichever is higher. So therefore, gone are the days where you can walk into the sub-registrar for simply registration. Now you have to find out the stamp duty value before itself, so that when you are making the payment, you have to deduct 1% TDS. At least you will have the stamp duty value in hand at that time. So it has to be on 1% of the stamp duty value, not on the sale consideration, my dear friends. The next one is a very, very important change, section 79A. Let us take a scenario. All of you know Amazon. Now it is a household name. Amazon was started in 1992 by Jeff Bezos. They did not get their first profit, sir. They did not even earn their first profit for 8 years. They did not earn it till 2001. So only in the 9th year of their business, the company got their first profit. For 8 years, huge losses they were making, my dear friends. So let us take the example, you are Jeff Bezos or your client is Amazon. So in that case, your client, 8 years losses, 9th year profit, is celebrating. Yes, finally I have got a profit. Thank you, Satish Subrayadu, for advising me, like that he is saying. So then what happens? Next day, income tax comes and raids him. So they are raiding him. They are making huge additions. Client is very upset towards their income tax has come. Okay, fine. At least 8 years losses I have. I will set that off against the additions, and at least I can avoid paying tax. Now government is coming and saying, sir, you cannot set it off. You cannot set off. In cases of search and survey, where any loss is there, whether it's carry forward or not, whether it is business loss or not, where any undisclosed income is there, we will make the addition and you will not have the benefit of set off. You will not have the benefit of set off. So therefore, mandatorily, you will have to pay high taxes on those incomes, my dear friends. Highly, highly unfortunate, highly sharp decision in my view. I think this is already 115 BBE and all. They have similar provisions, but they are reinforcing it now. So gone are the days of setting off your carry forward loss against your additions, my dear friends. So I told you there's a new TDS provision which was brought in, 194R. It's a new section where they have said any payment or perquisite, if more than rupees 20,000 is made to someone, then you have to deduct TDS on that at the rate of 10%. This is a very interesting provision because they took the wording saying perquisite. So that means, let us assume I have a watchman or I have an employee who's not, rather I have a staff. I'll not say employee because employee is covered under 192. So I have somebody who's supporting my house. It is not related to the business. Then I'm making a payment to him of 20,000 or let's assume 15,000. I'm also giving him a house or a room to stay in. I'm also giving him a house or a room to stay in. Normally the rent for that house will be at least 7,000 per month. So effectively he's got a perquisite of 7,000 per month. He's getting a salary of 15,000 per month. So 22,000 he has more than that in aggregate payment. So now I have to deduct TDS on that. If you're a person who's subject to tax audit, etc., no problem. You will normally be doing that for most of your payments. But the reason why they have brought this, my dear friends, is that they want to catch that person earning the income. Your watchman or that agent or the person who's earning this income, normally he will not disclose it anywhere. So there was no tracking mechanism for the income tax department. Now they have brought a tracking mechanism. It is not for the payer. It is not for you who is making the payment. It is for that fellow who is receiving that money because he is not filing the return of income. Many agents, they work with 10, 12 people. They'll be getting 30,000, 40,000 from each person. No TDS because he's not covered by 192. He's not covered by 194C. He's not covered by 194J. No provision applicable for him. Now he will be covered under 194R, my dear friends. Please be prepared to deduct TDS at the rate of 10% in all of these cases. Some small changes made to 148. It's not that important, so I'll not touch on it because of want of time. But contribution to research, you know, under section 35, you used to have excess deduction which was allowable. Now they've made it maximum 100%. Interestingly, in the current budget, they have brought a very funny change. They have said that now I'm a donor. I am donating now to that charitable society or institution or university, etc. And I'm claiming that as a deduction under section 35. government have now come and said, if that research institution, they don't furnish the list of donees to me, then the donor cannot claim it as a deduction. Sir, not in my control. You have approved this university. I am paying to the approved university. They have got all the certificate from your department. They have furnished it to me. I have contributed to them. If they don't file it, what can I do, sir? I am a donor. I don't have any control. I cannot go and say, why you have not filed it? Please go file. I cannot sit in front of their computer and make them file. Only income tax can do that. Why you are penalizing me? I don't know why as a donor, people are getting penalized now. I think this is once again a very impractical change which has come in the current budget. Because there are some changes in charitable trusts and societies also. It is very, very lengthy. So I'm not going to cover. There has to be a separate session because you can discuss these changes for 2-3 hours. Just to briefly touch upon it. Now, they said books of accounts should mandatorily be maintained for all trusts, all charitable societies, mandatory audit where it goes beyond the charitable maximum income not taxable. And the most important thing, provisions under section 1023C is now going to be made applicable for 12A and 12AB also. That is, you have to accumulate at least 85%. 85%, you have maximum 5 years. Within 5 years, if you don't do it, then 5th year, now it will be taxed. Earlier it was 6th year. Now they've made it 5th year itself. Like this, many changes they have brought about and tightened the regulations. So for cancellation, etc. So these are some important provisions which have come. I request the chairman and management committee members, they have to have a separate session, sir, on what are the changes for trusts. And I think you can plan for that. With this, we have come to the end of the session. Thank you very much for a very, very patient listening. And I thank the chairmen of both the ICSI Institute of Amravati and ICAI Vijayawada branch and management committee members for giving me this opportunity, inviting me to be here. Thank you all. Over to the organizers.
Yeah. Thank you, sir. Thank you, Abhishek, sir. That's a wonderful presentation, sir. Yeah, in fact, you have suggested already. That's what I want to share. In fact, few of the and senior members already called me, and by that time, I have already approached you and fixed the session, sir, for today's. But already they asked me to conduct a separate session for, especially for trust, and that's what your insight suggested. Suggest us that. How insight you have into this tax, especially with respect to tax itself, because the exact opinion they have also said, sir, we want a separate session at least for 2 hours only on trust, so that what are the changes in the budget we want to know, because so many changes are there. But if you go into in detail, there will be a lot of changes in trust and all. And coming to today's session, that was a wonderful presentation, sir. Of course, you have. FM has put it in just 1-2 lines or 5 minutes here, but you have gone into detail and what are the vital aspects which we need to know. You have made us aware, sir. Thank you once again for the love and affection you are showing up on Vijayawada branch, and we have many more sessions like this in future also, sir. Sir, you want to add any words, Manikiran, sir? Okay, right.
Yes, I want.
Over to you, Narendra. I think so. Ramkrishna Sanghu, sir, I have joined. Sir, if you are there, I would like you to.
Yes, sir. As Abhishek ji, actually, now you are presented at Vijayawada branch. All people definitely enjoying a lot because of your presentation. Seems to like Brahmanandam and all local popular players of cinema, and you are presented like that. All okay. That photo seems also first Bahubali photo also like that. Okay, different that Bahubali photo. No one is able to stop the smile. The presentation seems there is no change at all in the budget. It's a very nice to see you here, sir. Definitely, once the pandemic and all the things are gone away, you have to. We are requiring. We are welcoming you to Vijayawada branch in physical mode, sir, and further future programs also. Satish ji, do you want to add anything?
Narendra, Sarai and Ramkrishna Sanghu, sir, is asking us to share the screen. Some technical issue is there at his end. Sir, Ramkrishna, sir, you are there with us, right?
Yes, sir. Yes.
Yeah.
Hello, hi. Hello, sir.
Where are you, sir?
Could you share the presentation?
Yeah. Once, please check the presentation, sir. use the share screen option. If it is ready, we'll move the proceedings. Just now we had a wonderful session from Abhishek.
Yeah, I was listening actually.
About the direct tax implications of Union Budget 2020-23.
Yes, yes.
We want to indirect tax implications. We would like to hear from Ramakrishna Sangu sir. He's a seasoned speaker, well known to this side of ocean. Vijayawada is in fact, I think so. He will say it is his second home, because whenever there is a seminar, he will not miss to attend. And whenever I approached him, Purna, I am always there for the Vijayawada branch. That was his exact words. And he could find time to fit in to explain what Sitaraman ji, our Honorable Finance Minister, has made changes in with respect to indirect taxes. In fact, he will touch upon any other latest amendments also. I request Ramakrishna Sangu sir, if time permits, to touch upon any other latest amendment with respect to indirect taxes, to throw some light so that our audio, August members will benefit out of your session, sir. With this, I request Secretary of Vijayawada Branch, Narendra, to briefly introduce Ramakrishna sir to August gathering. Over to you, Narendra.
Yeah, thank you, Chairman, and thank you, Abhishek ji, your wonderful session. And in addition to today with us, Ramakrishna sir. Ramakrishna, our Chairman sir, rightly said the Vijayawada is another home branch to Ramakrishna sir. Ramakrishna sir is well known to the Vijayawada fraternity. Is also a local person. Always feel he is also member of Vijayawada fraternity, sir. And before introducing that, Ramakrishna sir profile seems little bit, but his knowledge is very lot. And CA S Ramakrishna ji is MCom and FCA is chartered accountant in the year of 2006. He is postgraduate Master of Commerce from Andhra University. He has 12 years of specialization in the area of indirect taxation, namely Central Excise, Customs and Service Tax, Foreign Trade Policies, VAT and CST. And he is the sole proprietor of Orchid Sangu and Associates, chartered accountants at Vizag. He has been co-opted as a member of the Indirect Taxes Committee of the Institute of Chartered Accountants of India, SIRC, for the years 2016, 17, 17 and 18, and 18 and 19. He has been co-opted as Chairman of Taxation Committee of the Andhra Pradesh Chamber of Commerce, Federation and Industry, APCCFI, for the years 16, 17, 17, 18, and 18, 19. He is also a renowned faculty for the taxation subjects to the students of ICA, ICMA, and ICSI, as well as the members of the ICA and ICMA and ICSI at various regions. Not only SIRC, is also popular in other regions also. And with brief introduction, he is the master of indirect taxes, I think, and expertise in the GST also. A lot of seminars he has taken to the branch, our branch also, in various branches of the SIRC. With brief introduction, now I welcome to the Vijayawada branch, sir, and virtually to the fraternity.
Thank you. Thank you very much. Could you have you shared that presentation?
Yes, sir.
Yes, sir.
Yeah. And it's moving, right?
Yeah,
Yes.
you can zoom it also. I think,
Yes. Thank you very much. Good evening, everyone. It's always pleasure speaking for the branch of Vijayawada, SIRC.
Sir, we have been joined also by the Amravati CS chapter, sir.
Yes. ICA company secretary members.
Okay.
Good evening, all of you. See, generally, governments, when they give any incentives to the people of the country or the state, they used to say proudly that we are giving so much of incentive to the people of the country or a state. That used to be the situation. But now it seems to be changing. Now the governments are saying proudly, so much we have collected. We are breaking records. Okay. The same fashion in the parliament, Madam Finance Minister proudly says, for the month of January 2022, despite pandemic, third wave, we have collected more than 1.4 lakh crore of GST collections. That's a proud moment at the moment. It's not that, you know, how much incentives is given, but it's matter of how much revenue we are generating. So this statement indicates how and what is the approach of the government. Okay. So the collections have been raising consistently for the past 6 months. Why? Because of, you know, the robust modalities being implemented by the departments across both the central and state departments. Okay, the more raids, the more rackets. Every day we are hearing that that guy is arrested, this guy is arrested, etc., etc. So they are of, you know, they are at best they are reaching their targets, targeting the not targeting, but they are able to work closely in a coordination by intelligence or, you know, by anti-evasion or state audit, etc., etc. They're able to make it. Okay. Now they want to further augment this. Further, they want to ensure that they will get more and more revenue collection. There is no revenue leakage. No, everybody pays tax properly, files returns properly. And this budget GST amendments definitely, you know, be from that point of view only. There are very limited amendments to the GST law this time, to the CGST Act particularly, but that is going to be having a huge repercussions. The amendments are aimed at, you know, in a way that most of the SSCs may not be able to claim input tax credit. Most of the SSCs may forget about what is ITC. Okay. There are a number of precautions being taken by the government. If you see section 16, you should have bought the goods, you should have possessed the tax invoice, you should possess the tax invoice, you should receive the goods or services. The other from 1/1/22, the other party should have uploaded his GSTR1. The same should be appearing in your GSTR2A. That is implemented from 1/1/22 directly in the Act by way of section 16(2) clause AA, where it should appear in GSTR2A. The other party should have paid the tax. You should have claimed the input tax relating to one financial year at most or maximum by 30th September of the next financial year. You cannot claim the credit which is not there in 2A but subject to 5%, 10% deviation, rule 36(4), etc., etc., etc. In addition to that, the commissioner will have a right to, you know, restrict you from using your input tax credit, you know, 86A provisional, putting restrictions on utilization of the input tax credit, so and so, so and so. Now let us see the further tightening of these provisions in such a way one would be, you know, terrified to read these provisions and understand these implications. Let us go through this. Now there is one more. There is one more in section 16. There are so many conditions. I think 5 conditions. Now this is the 6th condition. What's the condition? It is by way of an insertion of clause BA of subsection 2 of section 16. What does it say? It says the details of tax credit in respect of the said supply communicated to such registered person under section 38 has not been restricted. Now, one of the conditions, if you say you should have possessed the tax invoice, goods should have been received. Next one, the other party, the supplier should have uploaded in his GSTR1 and it is appearing in GSTR2A. It's not enough. It's not enough. Even before going to the condition of the other party should pay the tax by filing the return under the same 16, in between there is one more condition. What is saying? the details of the input tax credit in respect of a particular supply, which is communicated to you under section 38, and that communication should not restrict you from taking that credit. That's what the new clause says. In simple terms, I will tell you. It says, going forward, section 38. What is section 38? Section 37 is furnishing of outward supplies in Gstr1. Section 38, furnishing of inward supplies under the existing mechanism where the other party will upload the Gstr1. You will check, you will upload your other inward supplies, etc., etc. 39, filing of Gstr3B. Now 38 has been substituted, proposed to be substituted in this finance bill, and a new section 38 is to be replaced. And what is that new 38? I will discuss. But before that, that section 16 subsection 2 clause BA and section 38, there is a direct linkage. Now what it says, whatever the statement that is generated under section 38, as per section 38, it will generate a statement and give it to you as a receiver of the goods, as a buyer of the goods, as a buyer of services. It will give you a statement. It is not 2A. 2A is a simple document where the other party uploads Gstr1 with his B2B supplies. It will come into your 2A and you can see. But don't conclude that you can receive the entire 2A credit. No, wait. There is one more document. There will be one more document. Most probably it is 2B, which is already being generated. But now some legal backup is being given to the 2B. As of now, there is no legal backing up for 2B. The circular or press circular given on in the context of 2B says it is advisory. The recipient can check and take other credits, if any, which are left out in 2B. Okay, but now the 2B is going to have a legal backing by way of section 38. Section 38 will generate a statement, maybe called as 2B, and it will be given to you. And what he is saying in section 16 is that statement should not restrict you from claiming the credit, particular line items. For example, if 2A for a particular month says 10 lakh rupees of input tax credit. Now 2B comes with 10 lakhs, but saying that 8 lakhs is allowed, 2 lakhs is not allowed. That is the purpose of new section 38. Why, under what circumstances, we will discuss. But that is the purpose. That if it says that statement that is being generated by 38 and send it to you should not restrict you. If it is restricted, then you are not eligible to claim ITC under section 16(2)(BA). So this is the new condition as per which you cannot claim such credit. You cannot claim such credit which is restricted by a statement generated by section 38. So therefore, it is very important to understand what is this so-called section 38 that we will discuss in meantime. Before that, before going to section 38, section 64, 16(4) and 34 has been amended with respect to the time limit for claiming the input tax credit. We all know that input tax credit relating to an invoice pertaining to a financial year, that is a 2021 invoice, tax invoice or a debit note. 2021 tax invoice, the input tax relating thereto shall be claimed on or before the due date for filing the Gstr3B for the month of September of the subsequent financial year. That means if it is a 2021 tax invoice, you should have claimed the input tax credit by Gstr3B of September 21-22. If you have not filed by September of the next year, it is gone. You cannot claim forever. That is the maximum time limit for claiming an ITC. Now that time limit is being increased to 30th November. So people will get another 2 months time to claim the input tax credit. So if you want to claim 2021 input tax credit, 21-22 input tax credit, you will have time up to 30th November. This is a welcome step. Now what they are saying, it is proposed a dealer shall not be allowed to furnish the outward supply in Gstr1 for a tax period if any of the previous tax period Gstr1 is pending. If you recollect, we have a provision which is implemented from 1/1/2022, where it says you cannot claim Gstr1 of the current month if you have not filed Gstr3B of the previous month. This is different and that is different. This says if you have not filed Gstr1 of the previous month, you cannot file the next month's. Now here comes the whole amendments of Finance Bill 2022. What this section says, section 38. So section 38 is proposed to substitute the existing section 38. Now section 38 deals with furnishing of details of inward supplies, the existing section, but that is replaced. Now this 38 is replaced with new 38 stating that the details of outward supplies furnished under section 37 and such other supplies as may be prescribed, and an auto-generated statement containing the details of ITC shall be made available electronically to the recipient of such supplies in such manner and within such time and subject to such conditions and restrictions. This is section 38, subsection 1. Section 38, subsection 1. What section 38, subsection 1 says in simple manner is that it says the portal will generate based on the returns filed by the suppliers, that is their outward supplies, plus some other supplies. Some other supplies means import of goods, okay, or ISD credit, okay, and B2B supplies. All these put together, the portal will generate a statement. Let us for the time being name it as Gstr2B, and it will be electronically communicated to the recipient. So in the first instance, you will receive a statement. So you already have an input tax statement in the form of Gstr2A. Gstr2A you will download and keep it. Let us say it says 10 lakhs rupees. So you have Gstr2A credit of 10 lakhs rupees. Now you are receiving one more statement, Gstr2B as per 38 subsection 1. Now what it says? What 38.2 says? 38.2 says that the auto-generated statement under 38.1 shall consist of A, details of inward supplies in respect of which credit of input tax may be availed to the recipient. Now they are dividing it into two parts. And the first part contains, 1 minute. Admin, that sharing is going on, right?
Hello, sir. No, sir.
Going on, right?
With this home screen.
Yeah. So why I would not be able to see it?
1 second, sir. Shall I reshare the? Yeah. No. Yeah. But some other screen is visible, sir. No.
No problem. No problem. I'm coming.
So we are in the 6th slide.
Yeah. So what the section 38.1 says is, 38.1 says, I will give you a separate statement called Gstr2B. And now 38.2 says, 38.2 divides the Gstr2B into two parts. Clause A. Clause A says, this is the amount of credit you are eligible. And clause B says, the details in respect of which such credit cannot be availed, whether partly or wholly by the recipient for the following reasons. Hope you all understanding this. There will be a second part in Gstr 2B, and the law says, section 38 says that Gstr 2B will contain two parts. Part A, the credit that can be claimed by you, and part B, the credit that cannot be claimed by you for the following reasons. Reason number one, I have given as situation one. See why they are saying you are not eligible, because that credit which I am saying which is not eligible, that credit relating to such invoices which are uploaded by a registered person within such period of taking registration as may be prescribed. That means government will come out with such rules, prescribed rules, stating that if a person is registered recently, but he could not do other authentication or other requirements to be satisfied for the purpose of successful registration, and he uploaded certain invoices, government wants to disallow them, and it will be put under ineligible credit under Gstr 2B. That is the case 1. Now what is the case 2? The case 2 is if certain invoices are uploaded by any registered person who has defaulted in payment of tax, and where such default has continued for such period as may be prescribed. Now what it says? It says if your vendor has defaulted in payment of certain amount of tax for the previous periods, he has been served with a notice, but still he could not pay, and the matter is still pending, recovery is pending from that person. Now that person has that person has sold you the goods, he has defaulted to the government, he has sold goods to you, he has uploaded Gstr 1, it is appearing in Gstr 2A, but it will come in your Gstr 2B as ineligible credit for the reason that he has made a default to the department. See the unfortunate things that are happening to the GST. He has some default with the government or department, but for that reason, if you are buying goods from him, you will not be entitled to take input tax credit. Next one. The next case where you are not entitled to input tax credit. You are purchasing goods from any registered person. The output tax bill payable by him in accordance with the statement of outward supplies filed by him during a particular period exceeds the output tax paid by him for the said period by such limit as may be prescribed. Third case. In this situation, what happens is your vendor has uploaded Gstr 1 by showing turnover of 10 lakhs, tax payable 1 lakh. Now, for the same period, he has uploaded Gstr 3B showing turnover 9 lakhs with tax payment of 1.5 lakhs. In that cases, since your vendor has declared more tax liability in Gstr 1, but paid less tax in Gstr 3B, and if that person, from that person you purchased any goods, though they are appearing in Gstr 2A, you are not entitled to input tax credit because that will be classified as ineligible credit under Gstr 2B. This is situation number 3. Situation number 4. You are purchasing goods from any person, a registered person, who during such period, a particular month, as may be prescribed, has availed credit of input tax of an amount that exceeds the credit that can be availed by him in accordance with 38(2)(a) above, but such limit as may be prescribed. Now, what here he is saying, trying to say is that you are the supplier. Okay. And I am the recipient of the goods. Now I sold goods to you. I uploaded GSTR1. It is appearing in GSTR2A. Okay. But still the law says you are not eligible to claim such credit in case the supplier has availed creditor which is ineligible as per GSTR2B. Let me give you an example. I am a supplier with 10 lakhs of input tax credit in GSTR2A, whereas in GSTR2B, as per GSTR2B for that month, the eligible credit is only 8 lakhs. So that means I should have claimed only 8 lakhs of input tax credit, but I claimed entire 10 lakhs or more than 8 lakhs. That is my fault as a supplier. But in such cases, the law says the buyer, since you are purchasing goods from that person who has claimed more credit than what is available as per 2A, you are not entitled to input tax credit. And that particular portion will be kept in part B of GSTR2B so that you cannot take input tax credit on that. Then GSTR5 Situation 5. You are purchasing goods from any registered person who has defaulted in discharging his tax liability in accordance with the provisions of section 49(12). What is 49(12)? 49(12) says it is similar to your rule 86B. What is rule 86B? Rule 86B says if your taxable value in any month is more than 50 lakhs, then you can utilize maximum of 99% of the tax payable from the ITC ledger. That means your output tax is 100 rupees. You cannot use entire 100 rupees of ITC for payment of the total output tax payable. You can use only 99 of ITC and you must pay 1 rupee by cash. Now similar provision which is there in the rules, now they are bringing into 49(12). Now what they are saying in 49(12), they will prescribe that a class of persons, they prescribe a class of registered dealers who cannot utilize the input tax credit more than a prescribed limit, 80%, 90%, 95% of the output tax liability. They may say, boss, if you are falling in this category of dealers in a month, even though you have ITC balance, you cannot use the entire ITC balance for payment of output tax, but you must pay certain amount or certain percentage of the output tax liability only by way of cash. That is the new subsection inserted in section 49. So as per 49(12), going forward, once it is notified, going forward, if your supplier has made a default in compliance of 49(12), that means let us say 49(12) says for a particular dealer, you pay 90% of the output tax by ITC maximum and balance 10% you have to pay by cash. But your supplier has utilized the entire input tax credit for payment of his output tax liability. In that case, whatever sales made by him to you will be kept under part B of GSTR2B as ineligible credit and you cannot claim input tax credit. So this is what the new section 38. So what you are understanding by 38? 38 gives a statement, generates a statement called GSTR2B every month. It will be given to you and it will also tell you how much is eligible ITC, how much is ineligible ITC. And that ineligible ITC for the reasons mentioned in section 38 subsection 2 clause B. There are 5 to 6 situations where GSTR2B identifies that kind of transactions which are discussed now, situation 1, 2, 3, 4, 5, 6. It identifies them and put it under GSTR2B as a separate column with the heading that ineligible input tax credit. Once it is an ineligible input tax credit, you cannot claim ITC. Okay. I will give you one more situation to understand how much credit you will be actually eligible every month going forward once this section is notified. Let us say your books may have 20 lakhs for a particular month of input tax credit, 20 lakhs credit. Your Gstr5 says 18 lakhs. So there 2 lakhs gone. So the books of accounts 20 lakhs, Gstr5 18 lakhs. From there you will compare this with your Gstr5. Now Gstr5 says 16 lakhs because 2 lakhs is covered by this situation 1, 2, 3, 4, 5. The other party has defaulted. The other party has utilized more credit than what is eligible. The other party has utilized credit which is described as ineligible in Gstr5, etc., etc., etc. So your books may show 20 lakhs, but your Gstr5 is saying 18 lakhs. Further, your Gstr5 says 16 lakhs. So you are ending up claiming input tax only to the extent of 16 lakhs. This 4 lakhs, what happens? It will be pending for reconciliation for the subsequent months. That is what the new subsection. And one more, the government thought these 5 situations are not enough. Let me prescribe a class of persons, and if you are purchasing any goods from that class of persons, even that will be classified as ineligible credit under Gstr5. Okay. So in this way, the government is trying their best to keep the input tax monitoring and ensuring that the SSC claims as less credit as possible. So this is the major amendment to the GST Act proposed to be effective from a date to be notified by way of notification in the Gazette. This is not immediate effect. Okay. So you have other amendments which are applicable from 1/1/22. Rest that apart, this is a major blow to the industry, breaching all the concepts of seamless input tax credit across the supply chain, GST, one nation, one market, full credit across the supply chain and all. If one follows this particular way of doing things, the concept of ITC will not come. Already people started asking, why don't they remove the concept of ITC, lower the output tax rate? I will pay the output tax rate at lower rate. Let me not claim any ITC. And some people, some observation says that let everything be put under reverse charge mechanism. I will pay, I will take the credit. Okay. These kind of new ideas are coming. And 4912 we have discussed, second amendment. And finally, they made it section 50 subsection 1. They have already notified in the Finance Act 2021. They amended 50 subsection 1, that is the interest payable for non-payment of tax or short payment of tax under section 73 or 74 or any other provision. 18%, which is retrospectively has been amended, but 53 has been left out. What is 53? 53 says, the present 53 says, if any person has wrongly claimed, availed or claimed, it is enough if the SSC has only claimed but not utilized. He by mistake he has claimed, it is lying in the electronic credit ledger. He has not utilized it. Even then, section 53 proposes, levies 24% per annum interest on such excess claim or wrong claim of input tax credit. 24% per annum. Okay. But if you carefully observe section 50 subsection 3, it covers only 2 situations, 4210 and 4310. That is matching and mismatching of reversal of credits, which I'm not going into now. If you go through section 42 and 43, where there is a requirement for reversal of credit or excess or excess reduction of the output tax liability, only then 24% will come. In any other case, only 18% will come, even in the case of excess claim of credit, if it is other than 4210 or 4310. Now, despite all those things, now the law proposes amendment to section 53. Thankfully, now they have framed the language of the section 53 in such a way that any input tax credit which has been wrongly availed and utilized. So the existing provision says availed. The moment you claimed, you are eligible, you are liable to pay interest. But going forward, it is not like that. Even retrospectively, what it says, you have claimed and utilized the input tax credit. Only then section 50 subsection 3 will come into picture. So mere availment of the input tax credit will not warrant attraction of section 50 subsection 3. That means you have taken ITC, it is lying in the balance in the electronic credit ledger. Subsequently, you found out or department found out, you are reversing that, interest will not come. But interest will come only in a situation where you have claimed the credit and you have utilized it for payment of your output tax. Now, subsequently, you found out or department found out, now you are reversing by cash. Interest under section 50 subsection 3 will come, and this will be retrospective. One more change made to section 50 subsection 3 retrospectively from 1/7/2017 is that the reduction of the rate of interest, thank God, it has been reduced from 24% to 18% retrospectively from 1/7/2017 to as on date. That is, it will be, of course, to be noted that it will be effective from a date to be notified by the government. Once it is notified, wherever you have paid excess interest at the rate of 24%, you can go ahead and apply for refund of the differential tax of 6%. But it should be subject to the time limit prescribed under section 54, that is 2 years from the date of payment. Okay, so these are the amendments which are prescribed in the Finance Bill 2022. As you are all aware that there are few more amendments which are made applicable from 1/1/2022. I will discuss few of them which I feel important. Yeah. Now, in those things, the most dangerous thing is that assessment of self-assessed tax, recovery of self-assessed tax. This doesn't have any PPT. I'm just explaining orally.
Okay.
It's not there in the PPT.
Yeah, start sharing with you.
Yeah. So section 75, subsection 12. Section 75, subsection 12 says recovery of self-assessed tax can be made even without issue of the show cause notice under section 73 or 74. So if it is a self-assessed tax, then the department can go directly for recovery of tax under section 79 even without issue of the show cause notice. That's what section 75(12) says. Now, what is the self-assessed tax? One of them, which is included effective from 1/1/22, is that the turnover which is declared in Gstr1 but not in 3B. For example, you have declared a turnover in Gstr1, let us say 10 lakhs, whereas you have declared 8 lakhs only in the Gstr3B and paid tax on 8 lakhs. Now that additional 2 lakhs which is declared in Gstr1 shall be deemed to be self-assessed tax. once it is deemed to be self-assessed tax, section 75(12) come into picture. Once 75(12) come into picture, the department can go ahead for recovery without issue of the show cause notice under section 79 by attachment of your property, bank accounts, etc., etc. So this is a very dangerous amendment which has been brought in, effective from 1/1/2022.
Sir, sorry to interrupt you. Still that screen is sorry.
Still that?
Yeah, you can.
Old presentation is there.
Yeah.
He can remove that. He can remove.
No, you have only shared, sir.
Oh, I see. It's not sharing. Wait. Is it still coming?
Yeah, that screen has gone, sir, but yeah, still your desktop is visible. You can, sir, down one will be the stop sharing this thing.
Shall we proceed now?
Yeah, it is still coming, but anyway, go ahead with the presentation, sir.
Yeah. We'll proceed with this.
Yeah, we'll proceed. Okay.
Yeah.
Right.
So that is what to be noted by all the members of the who are filing returns. You should be very careful while filing GSTR 1 and 3B. If you have shown anything in excess of GSTR 3B in GSTR 1, that will be self-assessed, and you will know only after the bank account is attached. The bank manager will call your client and say, sir, your bank account has been attached under section 75(12). Second amendment that has been implemented from 1/1/22 is that restaurant services provided through electronic commerce operators, Swiggy, Zomato, etc. If any restaurant, whether they are below threshold limit or above threshold limit, anybody who is selling their or providing restaurant services through Zomato, Swiggy, etc., going forward, the liability to pay GST will be on the Zomato, Swiggy, that is the electronic commerce operator, and the restaurant person has nothing to do with it. For example, your client is a restaurant. Your client is a restaurant, and let us say further that he is registered with the GST department. Now he has both the sales, e-commerce operator sales, that is he sells through Zomato, Swiggy, and he sells directly to his customers. Now, going forward from 1/1/22, he is liable to pay GST only on the sales which he is making directly to the customers. He is not required to pay GST on the sales or restaurant sales which are made through electronic commerce operators, because on that the liability to pay GST is on the electronic commerce operator under section 9 subsection 5. The restaurant fellow need not pay any tax. Rather, he can disclose that turnover in his GSTR 3B as exempt turnover. So on that turnover that is he is making through electronic commerce operator, the electronic commerce operator directly will collect the GST from the customers and he will deposit the GST to the department. Restaurant person need not pay GST from the electronic commerce operator. This is another important amendment. Okay. And just now we have discussed that a new clause has been inserted by way of section 16 subsection 2 AA, clause AA, where it says that unless your input tax credit is appearing in GSTR 2A as per the outward supplies furnished by your supplier, you cannot claim ITC. You cannot claim ITC. Why this amendment has been inserted? So far, nowhere in the act which says that you cannot claim ITC if it is not there in 2A. Though department left, right, center issuing show cause notices and mail notices to the SSCs stating that there is a difference between 2A and 3B, there is no legal backup in the act. Nowhere in the act it is stated that if it is not there in 2A, you cannot claim ITC. In the Act, in section 16, subsection 3, it is stated that if the other party doesn't pay the tax by filing Gstr5 you cannot claim ITC. But it is nowhere in the Act which is prohibited, stating that if it is not there in 2A, you can claim ITC. Okay. So therefore, you can very much take the stand that even if it is not there in 2A before 1/1/2022, you can still go ahead, claim ITC and state that, okay, this provision has come only from 1/1/22. Therefore, for the earlier period, I am very much entitled to input tax credit, even if it is not there in 2A. Okay. So to avoid that litigation, government has brought in an amendment to section 16(2), and now they are clearly saying that the other party should upload his GSTR1 and it should appear in your GSTR2A. Only then you can claim ITC. That is one important amendment. And see, whenever you want to apply for revocation of your registration, where you applied for voluntary registration, now you want to take it back, or you are going for a refund, Aadhaar authentication is mandatory. Many clients are still not making Aadhaar authentication. Still, it is mandatorily required. So if they are not done with their Aadhaar authentication with the portal, they cannot even apply for a refund application under section 54. And the most important thing is that now whenever your transport vehicle has been stopped because of lack of proper documents like tax invoice or way bill expiry, inadequate details mentioned for various reasons, where the goods are detained or where the transport vehicle is detained, now penalty is 200%. Section 129 has been amended. If the tax payable thereon is 100 rupees, now the penalty will be 200 rupees. So now you have to deposit 300 for 100, 300 and get released your goods. Okay. And the 129 has been amended, read with 130, where the proper officer will have a right to auction the goods and sell the goods and the recover money after 15 days of serving the notice on the SSC. Once the goods are detained and notice has been served under 129 on the SSC, after 15 days thereof, he can go ahead and auction the goods, sell the goods, get the money, recover the tax, pay the balance if any to the SSC. So now there are two options before the SSC. Option number 1, pay the tax before this time, get the goods, take it back. Option number 2, file an appeal under section 107 before the first appellate authority. File an appeal before the first appellate authority, joint appellate deputy commissioner, by paying 25% of the penalty levied as pre-deposit and file an appeal. Okay. Only then it will be stayed. Otherwise, your goods will be auctioned. So these are the few amendments which are applicable, effective from 2022.
Sir.
1. Yes.
It is resounding. I think two systems are in same place.
Think so. Yes. Now.
Again, sir.
No, it's fine at my end, I feel, Narendra. I think so.
Now, is it okay? Now?
Resounding.
Still reason.
Yeah, fine for us. Go ahead, sir.
Okay, fine. Now, I think that these are all the amendments of which are effective from 1/1/22 and this Finance Bill 2022. Finance Bill 2022 provisions are to be notified by the government by notification, but very significant, very dangerous, and very unfortunate, because in whichever way you see, claiming of ITC will be very difficult and a lot of reconciliation work. Almost every month you will get a notice, email notice from the department stating that 2A not matching with 3B, 2B not matching with 3B, 2B not matching with 2A. Okay, you have claimed more ITC than 2B. All this stuff will come, and for every default or every mistake of the supplier, the buyer is getting punished. The supplier defaulted for his payment of taxes, I am not eligible to claim ITC. The supplier has claimed a credit which is more than what is there in 2B, the buyer is getting punished. The supplier not filed 3B, I am punished. So in section 38 is most important section, whereby government tried his best to reduce the claim of the input tax credit so that the SSCs will pay more tax in cash. Okay, any doubts on this session? We can take it up questions.
Yeah, friends, that's what indirect tax implications from Union Budget 2022-23. The recent amendments came from with effective from January 1st, 2022. There are any doubts? Yeah, I think so. Ranjani Srinath has.
Any message received? Yeah, can you can proceed, Ranjani?
Yeah. Good evening, sir. This is Ranjani Srinath. I'm working for MMTC,
Yes.
PSU under the Ministry of Commerce. What happened was we had filed we had made the GST on the due dates of 28th of every month, but we did not file the return during those COVID days. Still, we have got a thing from the GST department that this is the amount and you have to pay so much interest. It's a huge amount. So I would like to know, during COVID period, there was some relaxation regarding filing of returns and all this, 2021 and 21-22.
Yeah.
So can you just tell me a little bit of it, sir, please?
See, point number one, you please check with the portal the months for which the due date is extended. That is point number one. It is hardly okay for few months, so 3-4 months it is extended. That is helpful, definitely.
Okay.
Right now, I'm not in my mind. The dates are not in my mind.
All
but
right, sir.
point number two is important.
Mm.
This is a case where the SSC has paid the tax, and I assume that by 20th, the amounts credited in the electronic cash ledger.
Yes, sir. Yes.
Very good. If that is the case, you can refer section 49 once, payment of tax, where there will be an explanation whereby it will be stated that when the tax payment is said to have been made to the government, what is the point of time at which the government is said to have received the money? And the explanation says the date on which the amount is credited to the electronic cash ledger. Okay. If that being the case, you can, referring to such particular provisions, write a reply to them stating that, because we have come across these cases and we have replied and we got favorable orders from the department, where you say that I have paid the required amount of tax by 20th, and see section 49, section 49 for payment of taxes. Readily, I may not be able to tell you the exact,
I'll look into it, sir. I'll look into it.
It is subsection 9 explanation.
Okay.
49 subsection 9 explanation. The date of credit to the account of the government is the authorized bank shall be deemed to be the date of deposit in the electronic cash ledger.
All right, sir.
Okay. So if it is credited to the electronic cash ledger, you can refer section 49 subsection 9 explanation A. And that say that the payment is already done, okay, and therefore I'm not liable to pay interest.
Okay, sir. Only the return was filed late. Only the return was
they
filed.
can if they want, they can ask levy late fees for delay in payment.
That was also paid, sir. That was also paid.
In that case, you have a strong case. You can set it out.
Thank you, sir. Thank you very much.
Yeah.
Thank you, sir. Friends, sir is available. I mean, you can change the settings. If you want to pose a question, you can directly unmute yourself and ask a question to sir. Otherwise, we will wrap up the session. Yeah. Friends, I think I take it as that there are no queries from at your end. We'll close the session for today. Thank you, Ramakrishna Garu, for your excellent presentation on budget. Of course, indirect tax implications of budget, and also, presented by our Honorable Finance Minister on February 1st. Not only that, you have also implicated upon few important came effective from January 1st. Okay. We'll be sharing anyway Ramakrishna sir's email ID and phone number. So, friends, if you have any queries, you can reach him at. I think so. He shared his contact details in the chat box. So, please, you can always reach him at any time for further clarification of your doubts. And also, friends, this presentation will be made available on Vijayawada YouTube channel. Okay. So once again, if you have any clarifications, you want to listen to sir's presentation, you can always to Vijayawada YouTube channel, where almost 22K plus subscribers are there. You can find number of videos. Of course, sir's videos, previous videos also will be there on number of topics. So you can read it once again. Please do subscribe so that you'll be getting notifications in future also. So whenever we can have presentations, you'll be getting notifications in advance. Okay. With this, sir, thank you for your. With the short notice, you agreed our request. Of course, I know you are very fond of our Vijayawada branch, and you have been always number of times friends. For the friends of my fellow institute company secretary friends are there here. Sir is always very fond of Vijayawada branch, and he was always there. He presented a number of papers for us. And of course, there are many more who have members who have seen sir and got inspired by his presentations and by his lectures on indirect taxes. Many of my clients also keep on asking, how is Ramakrishna sir, how is he and all, because he is very much attached with my office also. Thank you, Ramakrishna sir. For your love and affection towards Vijayawada branch, and we would like to have you in future also on many more topics like this. Okay. Thank you, sir, once again. With this, we'll wrap up the session for today, sir. Stay home, stay safe, stay healthy. Okay. Thank you.
Thank you, sir. Thank you.
Thank you, Ramakrishna.